Welcome back. Shares of Dollar General are down about 3% today on a downgrade from B of A to underperform. They note 6 headwinds facing the stock, from higher gas prices to wage pressures, and they warn it's not just Dollar General that could struggle. Let's bring in Robbie Ohms. He's managing director and research analyst for Bank of America Securities. Robbie, this is interesting to me, for one, because Dollar General has been such a great performing stock for so many years, and also because there's a lot of economic implications here. So let's start with higher gas prices, and maybe I'll rattle through them. Return of grocery store promos, online grocery penetration, prescription growth, wage pressures, and just its valuation. How much downside do you think for Dollar General, and who does benefit from the environment you're describing?
Yeah, so we have a $190 price objective on Dollar General. And, you're right. Dollar General is a great company. They've been doing great for a while. I expect them to continue to do very well. They've got a great management team and a great strategy. We're adding them to a list of underperform rated grocery-related names that include companies like Kroger, also Sprouts, and, in addition to Dollar Tree, one of Dollar General's more direct competitors. And, we do think a couple things are potential incremental headwinds. One of them is the potential with gas over $3, the potential for that to go higher could weigh on Dollar General same-store sales. We also believe that the wage pressures that you're hearing a lot of people talk about could disproportionately impact Dollar General, because we calculate that their average wages are somewhere around $8.50 for the starting wage. That compares with, I think, around $11 for Walmart. I think companies like McDonald's have taken their starting level wages up as well. So we think that pressure could be an issue more than we had realized maybe as recently as a quarter or two ago.
Wow. And so you mentioned Walmart. You actually have favorable views on Walmart, Target, and possibly Costco and BJ. So basically, in this new environment, you need size, you need digital, you need scale. What else do you need?
You need all those things. I think another advantage, Walmart's already gone to $11 an hour, kind of minimum average. So incrementally, some of the pressures you're seeing, they might not feel as much. You also, as you mentioned, you need an omni-channel capability. If you look at Walmart and Target, drive up or pick up at the store continues to be a huge driver to their e-commerce business. And they're executing that at, we believe, a much higher level than most of the other companies that sell groceries or general merchandise.
If gas prices reverse course, could Dollar General be investable again?
Absolutely. I've had a long-term buy rating on the company. I did downgrade them to neutral a few months ago, but I believe that they have very tough comparisons against them. And we see things happening near term that weren't happening last year. We see pharmacies coming back online. Dollar General doesn't have a pharmacy, but the drugstores could pick up a little more traffic than they were last year. We're seeing grocery store promotions continue to move up. In the data we look at, we believe a more promotional grocery environment as you move through this year could put a little more than average pressure on Dollar General same-store sales. And then again, if gas, which is over $3, continues to go higher,
right,
and it stays there, that's a headwind that we believe impacts Dollar General more negatively than some of the other consumables retailers.
Shepard Smith here. Thanks for watching CNBC on YouTube.